Hi everybody. Now that you know how to find good team members, let's look at the first stage of buying a home. The money part. Obviously, the money is key. If you don't have the money part pretty well taken care of, there's no reason to move on to talking about price and terms. A key part of the money part is finding a good mortgage loan officer. They're often the first professional to add to your team, and your loan officer is usually going to be with you from beginning to end. We talked about how to find a good mortgage loan officer in an earlier video. Check it out if you haven't already. Once you find a good loan officer, it only takes 20 or 30-minute phone call to find out if you're pre-qualified to get a loan and the general price range that you can afford. The loan officer will ask you about your job, your pay, your debts, your expenses, your savings, and the house you want to buy. If you've already done your research online, you'll have a ballpark idea what the home is worth. Your loan officer should be able to tell you if you can buy a home in that ballpark. If it turns out that you aren't qualified to get a mortgage right now, a good loan officer should be able to tell you what you'll need to do so you can qualify for a mortgage in the future. It's not unusual that people need to work on improving their credit scores for several months before they can get a home loan. Even if a mortgage loan officer says you can borrow enough money to buy the place, you have to decide if you can really afford the place. Most people don't go up to their maximum loan amount when buying a house. Have you incorporated the total cost of owning a home, including the maintenance and repairs, into your calculations? Many first-time home buyers end up feeling house poor because they did not expect the ongoing maintenance and repair costs to be so high. If it turns out you are pre-qualified and you feel you can afford the place, this would be a good time to pitch the idea of buying the place to your landlord. If it turns out your landlord is interested, or even better, if your landlord pitches the idea to you about buying the place, then the next step is to get pre-approved for a mortgage loan. In the mortgage world, being pre-approved is a lot better than being pre-qualified. In some places, being pre-approved is called a mortgage commitment. Being pre-qualified is nice, but it's very informal. A pre-qualification, or pre-qual as we call it, is just a loan officer saying, hey, if everything these people told me over the phone turns out to be true, then maybe, probably, might be able to get a mortgage from us. It's much better to be pre-approved. Being pre-approved means your loan officer feels confident, you make enough money to make the monthly mortgage payments, and you have enough cash on hand to make the down payment and closing costs. To get pre-approved, you'll need to send a bunch of paperwork to your loan officer. Stuff like your last 2 years' tax returns and W-2s, your most recent pay stubs and bank accounts. The hardest part for you will be finding all that paperwork. Once your loan officer has all that paperwork, it won't take them long to tell you if you're pre-approved and the maximum amount of money they'll lend you. A pre-approval is your loan officer saying, in essence, hey, we've pulled their credit scores and have copies of their pay stubs and so on, and we have approved this person for a mortgage of up to X number of dollars from us. By the way, if you're pre-approved to buy a more expensive home than this home you're looking at, do not tell your landlord. Your landlord may pressure you more on price if they know you're pre-approved to pay more for a home. Now be careful. Sometimes people who are pre-approved do things that change it so they aren't pre-approved anymore and they can't get a mortgage anymore. For example, don't change jobs or quit your job. Don't buy a car or any other vehicle. Don't fall behind on any of your bills. Don't spend the money you've set aside for the down payment and closing costs on anything else. Don't buy any furniture or appliances until after you actually own the place. Those purchases might lower your credit score so you no longer qualify for your loan. Okay, great. Now you're pre-approved for a mortgage. You know, this home buying thing might really happen.